is about the regional economic outlook, the developments and the outlook for the Caucasus and Central Asia region, which I will call it as a CCA. And these are a few slides. The slides have three parts. The first part is to put context into the discussion. It's about the recent developments. It will be familiar to you. The second part is our forecast for 24 and 25. And then the third part, it's a short summary of the policy priorities, the way that we see them for the period ahead. So let me start with the presentation. So, recent developments. Growth has been robust, particularly in 2022, but also in 2023. The median growth in the region is about 5.5%. And although there is quite a bit of variability in countries in the CCA region, overall and on balance, growth has been continuing, the growth momentum continues into early 2024. And I think one needs to put this in context. The global growth is very modest. We've seen the global growth at around 3%, which by historical standards, it's quite low, and it has been quite low compared to the previous decades. And we also need to put this growth performance in the context of the expectations that we had. And this is the right chart that you can see the revisions or the change of growth compared to what we expected in October 2021. And you can see significant revisions to the growth outlook for 22-23, both for Armenia, but also for some other countries in the region like Georgia, but also Tajikistan and a few other countries. So overall, growth has a price on the upside, and growth momentum continues quite strongly. Now, let me turn to some factors that have really been behind this performance. We are all, of course, familiar that domestic demand, domestic consumption has remained strong, particularly after the pandemic. In 22-23, domestic consumption has remained strong. But I would like here to emphasize two factors that have been particularly important in the last 2 years. And one is the strong performance on the trade side and also on financial flows. On the trade side, we have seen that actually trade has increased, and trade has increased with several regions of the world, with the US, with the European Union, and also with China. And the blue lines here show the shares of the Caucasus and Central Asia regions in the exports and imports of first of the US, I think second is the EU, and the last bit is with China. So I think this shows that the trade patterns have changed in the last 2 years compared to previous ones. And at the same time, one of the story of the last 2 years is also the financial inflows, particularly from Russia to the region. And we have seen the pickup, particularly in 22 and 23, important flows for oil importing countries. The chart here takes a partial shot on the FDI. Not only flows increased in general, but also FDI in the region has increased. Turning now to inflation. The story on inflation is one that the shock in commodity prices in 2022 pushed inflation up to most countries in the region, in some in double-digit levels. And we've seen, in 2023, the deceleration of inflation, which has been quite quick. And it has been quite quick, particularly because many central banks in the region were very proactive in actually trying to reduce, to tighten financial conditions. And we've seen, that actually inflation now in some countries is below the target of the central banks, which has allowed monetary policy to become to ease in some of the countries, including here in Armenia with the recent 250 basis points reduction in policy rates. Now, turning to fiscal policy, the first chart shows that actually what we've seen is that the spreads continue to ease across the board. And here it shows the blue lines are the spreads of CCA countries. The red is as peers, as comparators. We have put BRIC countries. And you can see that actually CCA countries have about the same performance in 2024 as some of their peer countries. Apologies, I see that some of the country identifications don't show in the chart on the screen. The fiscal deficit performance has been mixed in the region. We've seen some countries that fiscal policy has become more expansionary. Particularly this has been in the case of Uzbekistan, as financing flows starting to ease in 2023. The government expanded its fiscal stance, trying to stimulate growth. The rest of the countries, we have seen some other countries like Kyrgyzstan, which is the first Kyrgyz Republic that actually we went to a much more tight fiscal policy to reduce the deficit that had increased in previous years. The good story in the region is that because of the growth, debt levels have remained moderate, and because of the growth, so this is a strong feature of the CCA economies, the relatively limited debt vulnerabilities compared to other parts in the world. Now, this is the context, and let's move to what it is, the outlook for the CCA region. So the bars here show the 2024 forecast, and the dots is 2025. As you can see, we forecast growth to remain robust in 2024 and 25, pretty much throughout the region. The first group of countries are oil importers. For Armenia, it's the second bar with about 6% growth in 2024, moderating a bit in 2025 as some of the factors that supported growth in 23, including the financial inflows, are moderating, and some of the longer-term issues are coming more into play. But overall, the outlook is fairly strong and positive for the region. And inflation is projected to continue to decelerate. We forecast gradual inflation to return to the targets of the central banks, differentiating in some respect between oil importers and oil exporters, but overall, for most countries, inflation is on downward trajectory. Now, of course, this forecast is our baseline. And what we have seen in recent years is that actually the world has been hit by unforeseen events, events that sometimes we didn't expect, including the pandemic, including the commodity price shocks. And therefore, this baseline needs to be seen in the context of significant uncertainty that there is in the region and the world. And here we flag a few risks on the downside and risks on the upside. On the downside, both global risks and regional risks are particularly dominant. And one of the biggest risks at this moment is that the global economy is still in a very modest phase of performance. Growth could surprise us on the downside, particularly in China, as they are trying to deal with some of the financial sector issues that they've been facing. Inflation could become persistent in the world much more than we thought. The Fed, as you know, at this moment is switching its view for the policy rate. We expected that policy rates may be cut in June, but this needs to be seen. And we could be surprised that inflation turns out to be more persistent than what was the baseline. And of course, geoeconomic conditions could surprise us, as we have seen in the Middle East more recently. In the CCA, the key risks that we see is particularly related to the structural reforms, to the slowdown of reforms, which could remain important for these countries to continue to improve economic prospects, as well as climate shocks. We've seen the climate shocks most recently affecting Kazakhstan or affecting the UAE in Dubai, the floods also a few years ago, a little bit further out in Pakistan. So therefore, the world is very susceptible to climate shocks. Upside, of course, there are risks as well, and the key risks that we see is that the global growth could surprise us on the upside, or inflation could decelerate faster than expected. Therefore, policy rates would be reduced faster than we thought in the baseline, and financing conditions could ease faster. And in the CCA, key upside is that the growth reforms that are happening may stimulate growth, and we'll have positive momentum. So this is really the outlook and risks that we see, a positive outlook, and in the context of also significant uncertainty and risks on both sides. Now, let's move to the third part, which is the policy priorities that we see for countries in the region. And clearly, the key priority is to maintain macroeconomic stability and continue to push ahead with the structural reforms to transform the economies. On macro policies, on monetary policy, priority is to stay focused on bringing inflation to low and stable levels. So price stability remains the key policy objective. Avoid easing monetary policy too quickly or prematurely, be more data dependent, and see what the inflation dynamics are. Key in this respect is central bank independence, which gives credibility to the policy effort to bring inflation to low levels, and continue to improve the instruments for monetary policy effectiveness. Turning to fiscal policy, maintaining prudent fiscal stance remains important to maintain moderate debt levels. This is a key strength for the CCA region, and it's very important to maintain debt vulnerabilities at moderate levels. This would require continued prudent fiscal stance, as well as continued efforts to enhance the fiscal frameworks, to think more fiscal policy in a medium-term context, continue to improve tax policy and revenue mobilization to meet the spending needs, and continue to rationalize inefficient spending, particularly on targeted subsidies and transfers. The important point is that in this positive outlook for the region, this is a unique opportunity for governments to take advantage of this time and press ahead with structural reforms. Structural reforms are needed because productivity is still low, relatively low in the region, and the reforms are needed first to create the conditions for a more dynamic private sector. Reforms to continue to manage SOEs more efficiently, to reduce losses, and reduce the state footprint in the economy. SOEs involved in commercial activities could be divested over time, and continue to invest in human capital, particularly with the advance in technology. It's important to maintain a labor force that it is skilled and educated, and continue to confront challenges with climate change. This is particularly relevant for climate adaptation and transition for countries that are oil and gas producers. Now, let me come back to one slide that I presented earlier, and this is on the slide on trade and trade diversification. We've seen that trade has increased in the CCA region, and this has been across certain categories, products, iron and steel, copper, chemicals, cereal. So this shows that there are new opportunities with the new patterns of trade for the CCA region to take advantage of. And key priorities in this respect is to continue the deregulation of non-tariff barriers, continue the investment in infrastructure, including in connectivity, and continuing to move ahead with some of the reforms that we discussed in order to seize the opportunity to diversify both the products and the markets for the CCA region. With that, I would end my presentation, and back to you, Eric. Thank you.
Thank you, Mr. Avanitis. Since you were so articulate, we're going to start the questions with you. As outlined by your report, despite multiple shocks, the economies in the region have been relatively robust as far as growth is concerned. What do you see as the key factors that could continue this moving into the future, especially in long-term growth in the CCA region? What do you see as the key policies for higher long-term growth emerging in the region as a standard?
Eric, thanks for this question, which gives me also an opportunity to elaborate some of the messages in the presentation. And clearly, we saw that our outlook is that growth will be positive and the outlook is favorable for the next 2 years, but there is a challenge of maintaining strong and sustainable growth for the medium term. And in this respect, I would like to emphasize 3 key factors. One is the importance of maintaining macroeconomic stability. This has to do with both monetary and fiscal policy. Low and stable inflation is particularly critical for people to be able to make long-term decisions, to be able to invest, and therefore, clearly the key priority is to maintain monetary policy to bring inflation down and keep it at stable levels. Fiscal policy is particularly important because we've seen that countries need to have both external and domestic buffers to be able to meet shocks. And we have seen economies being hit by shocks over the last 4 years, and therefore there needs to be space to respond to unforeseen economic developments. The second area that we have emphasized in the report is really the importance of structural reforms. Structural reforms, both because productivity remains relatively low and external competitiveness can be strengthened, and also because we see that one of the important factors in the CCA region is really the acceleration of both domestic and foreign investment. This is something that is needed in order to create much more sustainable but also higher growth over the medium to long term. What is important for it is continue to improve the business environment, continue to reduce red tape, continue to remove excessive regulation. So therefore, continue to create a level playing field for more competition to emerge in the private sector. At the same time, because SOEs, state-owned enterprises, remain very important in many countries, it's important to improve the management of SOEs. And SOEs are involved in many countries, not only in some of the strategic areas in the economy, but also are involved in commercial activities. And for more efficient and better management, it's important to have a strategy to divest from SOEs in commercial activities and increase the opportunities for the private sector to grow. The third area is the effort to create export-led economies and export-led growth. Therefore, efforts in taking measures to improve trade and seize the moment of diversification for both products and markets and create new opportunities for the economies. Particularly for countries that are dependent on oil and gas, it's very important to continue the effort to diversify the economies. The dependence on oil and gas needs over time to be reduced, and the private sector beyond oil and gas to be developed. Thanks.
If I may ask a question based on your response, your last point, you're talking about regional connectivity and broadening that. But at the same time, in the world today, especially in the United States and Europe, you see this insourcing movement where we're trying to move away from having to be dependent on China and Taiwan and other things. To what extent does that contradict what you're calling for, or it doesn't?
Yeah, very good question. And clearly we've seen two different trends. One, fragmentation is one of the major concerns at this moment in terms of economic and geopolitical importance. And this fragmentation has led particularly to onshoring or friendly shoring economic activity. But at the same time, what we have seen is that the volumes of trade have not come down. So trade remains very important, both for the US, but also for most countries in the world. It's just that the patterns of trade have changed. Have changed from countries that now are considered competitive to other countries that are considered more friendly. And therefore, there are opportunities with this new landscape of really trade remaining important to take advantage for countries in the CCA region to take advantage of that, because they managed to have relations, very good relations with the US, with the EU, but also with Russia. And therefore, this environment allows or creates new opportunities that I think the CCA countries can take advantage of.
Thank you very much, Mr. Arvanitis. And now we're going to move on to Martin Galestian, Central Bank Head of Armenia. Mr. Galestian, inflation has fallen since 22, and it's not close to historical averages and targets in most of the countries in the region. Given Armenia's recent positive experience in reducing inflation, what do you see as the key risks moving forward? And do you think the central banks have completed their mission of containing inflation?
So, if I may, before answering your question, let me first thank Thanos and the whole IMF team for choosing Yerevan as a place to launch the regional economic outlook. I think if I try to answer your question, probably I need to divide it into two parts. One would be what report also mentions, that we shouldn't be celebrating things before we solve the problems. So there are several countries in the region, including Armenia, which can probably proudly say that we have been able to achieve what we are created for. So our inflation is down, and then we are below the target, but due to the base effects. And then we know that due to our monetary stance that we took much earlier than many other central banks did, because if I trace back and traject into the past, you would see that Central Bank of Armenia was probably one of the first central banks in the world to start the tightening cycle. But we did it when our inflation was even below the target. So we somehow projected in the future, and we saw inflation coming, and we didn't believe in that transitory story that many central banks became a victim of. And then we increased the rates, and then we thought at one point that we were able to fight the inflation. But then Russia-Ukraine started, and then there was a new cycle of external demand, which drove prices, especially prices for services, and then non-tradables as well. So we continue to increase the interest rates. I think at the peak we had 10.75, and we were been able to achieve what we were aiming, I think, by April last year. And since then we are in a cutting trajectory, and then now interest rates are 8.25, and then we see that gradual decrease, what made our kind of policy more in tune with the reality. So what my advice, or what central banks should be doing, is to stay focused on their mandate, as was mentioned by Thanos and is mentioned in the report, because low and predictable inflation, which is close to the target and creates a nominal anchor for economic agents, is the aim that central bank is created for. So by bringing that into reality, creates an environment where businesses want to invest. And Thanos also mentioned productivity. We all know that in the long term money is neutral, but if you manage inflation properly, that creates incentives for businesses to invest and take total factor productivity up and our potential GDP up.
Thank you very much, Mr. Galsyan. Now we're going to move to Ms. Irina Seylanyan. It's your turn now. CCA countries have been able to weather several shocks over the past few years, better than many people have expected. On balance, how do you see the economic opportunities in this region?
Thank you, Eric. And thank you, Thanos, for the very insightful report. I actually always follow all your reports and analysis with great interest. I think I will just start with saying that obviously within the region, countries have a very, while they are very common, and that's why they are grouped together, but they also have some structural differences. So my response will be probably closer for the countries which are closer to Armenia from the structural perspective. So generally where the risks are high, the opportunities are also high. It's just important to understand those risks and then take the informed decisions within your sort of risk appetite. I think at the inception of the Russia-Ukraine conflict, nobody could imagine that while obviously having this devastating humanitarian impact, the conflict would create such a significant boost for the economies in the most of the CCA countries, and also create the opportunities for the financial sector within those countries. what we have seen quite high immigration, a significant inflow of remittances and capital flows, and obviously that created quite a significant also demand for the simple banking products like cards, deposits, accounts, remittances, foreign exchange, and then the financial institutions obviously were keen to capitalize on those opportunities, and they started provision of those simple banking services, and we have seen quite significant increase in fees and commissions income, in income from foreign exchange, increase of the deposits. Mainly we have seen quite significant increase of non-resident deposits and accounts, which in its turn created quite significant liquidity buffers for the banks. Some were able to even reduce their professional funding costs, and professional funding at the time when the interest rates, international interest rates were going up. And also the banks were able to create quite significant capital buffers to be able to then cope with the future shocks, also thanks to the policy, regulatory policy implemented by the central bank. So at the same time, the banks were not very keen to increase the lending at the same pace, and again, that's about sort of risk management here, because it was not very clear for how long that liquidity will stay in the region. And while we have seen in certain pockets increase of loans, but generally the lending didn't grow at the same pace as deposits, and the banks were criticized for that, but they were actually simply managing the risks. And then obviously the other significant opportunity which was there for the financial sector is the facilitating the significant increase in the trade flows. We have seen a significant increase in the trade flows with Russia, the re-exports. So the financial system was quite keen to capitalize on those opportunities, but obviously that also was posing quite significant risks of international sanctions. And then the banks boosted their compliance functions quite considerably, so they are able to cope with those risks and manage the increased risk, but also capitalize on the opportunities.
Thank you very much, Irina. In fact, I think one thing I think banking profits have actually doubled in Armenia over the last year, if I'm not mistaken. That's how well the sector is doing. Yeah. We're going to move on to Mr. Drakinos. One, because we really want to hear what you have to say, and secondly, for the purposes of regional peace, to make sure we have an equal number of questions between Armenians and Greeks. So in your case, in addition to trade with other regions, there's scope for greater integration among CCA countries. What do you see as limiting economic integration within the CCA, and what could governments do to promote greater connectivity between these different economies?
All right. Thank you very much for the question. Thank you for the hospitality, and thank you for inviting, EBRD as a multilateral development bank to share views. We can share views. I think we are entitled because we have offices in all the countries. The CCA. We are in Caucasus. We are in Central Asia, and personally, I've served here and in Central Asia for many years. So I have, let's say, kind of hands-on experience in view. You mentioned about integration. Yeah, integration is very important to be achieved, and there is a lot to do, and there are some obstacles, and there are some maybe low-hanging fruits in order to achieve that. Integration would be a tool for further growth, and of course we've seen in Thanos' report that there is already some growth in the region, and we are very proud of it. But maybe increased efficiency, integration would be key to make this growth even more sustainable, more well-rooted in the economies, and we'll have better results. So one obstacle, since we should be starting from obstacles, is that we have in Central Asia and Caucasus trade, which is a key to development and to integrate the economies, is kind of expensive. It's expensive because intra-regional trade, there are some objective difficulties. The area is vast, is huge. I mean, you put Europe, and Europe is like, say, not much larger than Kazakhstan alone, right? This is just sort of in terms of square kilometers. I mean the EU footprint of Europe. So you see, it's a very big area. And in order for intra-regional trades to happen, you need infrastructure, and which is not always in place. There are some geographical difficulties, and I'm trying to integrate and put into the picture of Caucasus and Central Asia. You have the Caspian Sea. So Caspian Sea is nice to have, of course, but also it's an obstacle if we're talking about trade, because it preconditions the need for multimodal trade. So a truck or a train has to reach a port, then cargo should go in a ship. Caspian is not so easy to navigate, we hear. And then how much trade is there already happening, and what is the prospect? We read in the reports that the growth of trade can triple, and the distances can also be halved or to 1/3, depending on some changes. And for these changes, you need some political will. You need countries to talk to each other, be more open, and you need some baseline agreement on some infrastructure, unblocking of infrastructure obstacles in terms of procedures, cross-border crossings, and that is what is needed to increase trade, to integrate more the economies and actually bring them at their natural position into the world economy. One more thing that I wanted to say is that there are some structural also problems in developing this integration, because and what I mean by that is the economies themselves, they are not very diversified. There are a lot of exports and trade is done on raw materials, and there is not much value added created in this region. I mean, each country is different. There are oil and non-oil dependent countries, but there are those other ones that don't have oil, but they have other natural resources, but they don't have the means to extract them and add value and then trade, higher value goods. So economic diversification is also mentioned in the report by IMF. Thanos mentioned it, is very important. So in order to do this, you need to governments need to think of policies. I'm not in favor of subsidies, but maybe sometimes some subsidization should be, part of the equation to start something, to encourage something to happen. So we will hear about this. But in order to make these economies diversify and pass on to more sectors, so that they can address new markets. So these are the points. I mean, I think I can repeat. We have the geographical and the issues, the vast market, the economic diversification that is necessary. We need better regulatory regime, more simplification of cross-border crossing in order to achieve this integration. Thank you.
Well, I think yours was an excellent answer, especially the last part, which I think leads to what I call the devil's advocate question. Everybody speaks of integration as being very important, but what if you're a policymaker in this country or in Georgia, and it's actually a lot more relevant to be able to sell your products to the EU than to sell it to any of your neighbors for countless different reasons? Isn't that almost what this regional integration is, a cliche, when it's actually you need to be far more focused on what's really at hand and what's relevant? I mean, you look at the regional economies in the Caucasus, there's 3 different countries that have completely different economic models. One of them is entirely oil and gas. Actually, there's no economy outside of that. Armenia is banking, tourism, half a dozen different things. Georgia is very much tourism. And these are countries going in different directions. How do you actually integrate them? even if you wanted to and the political will was there?
There are some sectors, for example, renewables, or there are some concepts like the putting Caucasus as a region, as a hub or as a transit hub, or position it to where geography makes sense. It's between Europe and Central Asia, and China behind it. So there are a lot of opportunities there. And the countries, yes, you described it quite accurately. There are different in their structures, but there are many areas that they can and maybe, allow me to say, should consider seriously, cooperating and taking the potential. It is much better, and the wealth of the countries and the GDP and the people's lives will improve quite significantly, I think, if we capture this potential that the region has. And for that, we need, a bit of political will. We need the IFIs to play their, catalyst role. We need the banking sector to support private sector development in these areas. And we need to trust a little bit the market mechanism, because, yes, you may always want to target the EU to export, but then the EU is a Black Sea far away in terms of cost, and the neighbor next may be a cheaper destination, and like an internal market.
Thank you very much. Mr. Tanos Arvantis, we're going to come back to you. The CCA region has overall moderate debt levels for the most part. However, borrowing costs remain rather high, and there's increasing pressures for public investment and social spending. How can governments preserve their fiscal buffers while supporting economic growth?
Clearly, the pressure for higher spending is real. It's real in terms of infrastructure. We just discussed that actually the needs for infrastructure, including for connectivity, remain very high, but also for social development. And on top of that, countries need to invest for climate resilience and make sure that the infrastructure is less vulnerable to big shocks that we have seen. But at the same time, it's critically important to maintain debt at moderate level. How can all this be done? I would mention three factors. The first is that fiscal policy needs to be much more strategic and forward-looking. Budgets need to be seen not as an annual exercise, but as a multi-year exercise with developing medium-term fiscal frameworks, where spending is seen more in the medium-term context. And in that context, also, revenue is decided about what is the sustainable revenue that is needed in order to provide the resources for the spending needs of a country. Because it's really important to be targeting sustainable fiscal balances that are necessary to keep levels at a moderate level. Medium-term fiscal frameworks can bring predictability, can bring also discipline and accountability for the fiscal authorities. And therefore, I think it's much more needed now to see fiscal policy, given the spending needs that will be high for a number of years, to be seen in the medium-term strategic context. At the same time, the revenue mobilization effort that is underway in many countries needs to continue. What we have seen is that the tax gap, that is the gap, given the tax system that the country has, what is the tax collection that it has compared to what it could collect, it's really large. And it's really large because informality is still present in many countries. There are many opportunities for tax evasion, tax avoidance. And also the tax law inside includes provisions that allow for concessions, what we call tax expenditures, that are actually quite substantial in many countries. Therefore, it's critically important to continue the efforts to strengthen tax and customs administration. And all of this is because you need to create the resources that are needed in order to spend on critical infrastructure development and social needs that the countries have. So therefore, revenue mobilization provides the resources that many countries need for the long run. Third reason factor, I think it's very important to actually consider fiscal risks that countries undertaking beyond the budget. Many governments at this moment are trying to be engaged in supporting activities, for example, with guarantees. It could be supporting activities through concessions and public partnerships, and also engaged in SOEs, and SOEs many times are loss-making. Therefore, it's very important for the governments to have a good assessment and monitoring of the fiscal risks that they are undertaking by participating in activities that are beyond the budget, and therefore to have a clear idea about what are the contingent liabilities that have undertaken in order to make sure that actually the debt levels and the fiscal policy remain sustainable over the long run. And of course, because the region has a lot of countries that are very much dependent on oil and gas revenue, it's very important for these countries to continue to develop their fiscal system, to become much more broad and more efficient in order for them to be able to develop more permanent sources of fiscal revenue other than only on oil and gas. Thanks.
Thank you, Thanos. Mr. Goldstein, we're going to come to you now. Several countries in this region have benefited from this increased migrant flow, trade flow, tourism, remittances from Russia. These inflows, combined with additional financing flows, which have created strong demand locally, have fueled an expansion of credit, especially for mortgages and construction. What do you see as the risks related to a strong credit growth that warrant closer attention, and what measures should be adopted to stem risks originating from this particular sector?
So I think in case of Armenia, we need to talk about at least two layers. First layer, probably, which was much before then we had this positive external shock that you mentioned, was a layer of a very lavish government program on tax refund. So Armenian government basically introduced a very generous program to kind of subsidize the interest payments from people's income tax, which you can probably not find anywhere in the world. So it's not even tax deductibles, but we're taking everything on the government, on the taxpayer side, which is lavish and a bit dangerous from our perspective. And then on that layer, we had this external layer of complication, which was arrival of new migrants to Armenia, which created this anxiety among Armenian national players, for example, just ordinary physical persons who saw people coming and they don't need an extra apartment, but they think that it's rational to buy an extra apartment and to kind of rent it to the newcomers, which created this external extra demand. And from these two complicated interactions, we witnessed a phenomena where our mortgage and real estate market got overheated. And in several of our financial stability reports, in the risk section, we have mentioned that several of our models show that there is a possibility that prices are overheated by around 20 to 30%. And then we mentioned it several times. That's why we decided to be a bit more proactive in our own policy toolkit, with our own policy toolkit. So we somehow tightened the LTV, loan-to-value ratio. Then we introduced a regulation or law, basically, which prohibits physical persons to receive mortgages in foreign exchange, which somehow helps to eliminate the foreign exchange risk from that equation. And third, what we did, Irina also mentioned that in her answer to your previous question, we increased the counter-cyclical capital buffer by 150 basis points, which means that, going back also to Thanos's points, we need to create buffers during the good times, because obviously the risks are building up and unavoidably we will face risks in a coming future. So in that sense, I think it was very rational, both from the banking sector themselves and also from our regulatory perspective, to increase these buffers, to prepare ourselves for possible coming negative shocks that we might see in the future.
Well, you raised a very interesting point about the housing subsidies. We hear this discussed a lot. Does anyone have a figure on what that amounts to in budgetary terms? Is it $1 billion, $500 million? Does anyone have the numbers on that? Because it's actually quite a unique program, because as you said, it's an unusual thing, but at the same time, you know, I come from the United States where almost no young people can buy houses nowadays. So, you know, from a policy perspective, one can have arguments, but it'll be interesting to know what the actual fiscal hit on it is.
I'm not on the fiscal side of the business, so I wouldn't be commenting on that, but my comment was mostly about the purpose of the program. So if it was aimed at social part of our population which needs houses, then we can think about it somehow, right? But we know many instances that people who own first and second homes, they buying the third house and renting it out. So we need to understand the peculiarities of the program, and then we need to understand the impact that program has on the society and on the economy, because we also know that there is a phenomena of our buildings in Armenia, like the fund of the buildings that we had is outdated, and we are in an earthquake zone. So at the same time, we understand that we need to build and rebuild the new ones. So there must be some type of incentives, but how do we structure it? That's what matters from my perspective.
Thank you, Mr. Gostian. We're going to come to you, Irina, again. We discussed some of the hindrances to stronger medium-term growth and foreign policy priorities. In your view, what makes the region attractive to foreign investors? What gives them pause, and what are the most important steps to catalyze further foreign investments in this region?
Yeah, thank you. I think we discussed quite a few points around that already with my colleagues here. I think from my perspective, I will just mention a few things in terms of the positives. I think first of all, and we talked about it already today, the positive economic story that we have and the growth prospects for the most of the CCA countries. Then the exchange rate stability, again, for the most of the countries. And I'm talking here about the medium to long term. We do see some ups and downs, quite significant volatility in the short term. But if you look into the longer term, from the investor perspective, I think that's what matters. And we do see, we do have quite stable currency. And the same, I think we can talk about the inflation. Again, in the longer term, we do have the inflation within the targets, which is obviously very positive from the investor perspective. And also for most of the CCA countries, again, we can't talk about all of them, but the ease of doing business in terms of, so that's to me is the positives. In terms of the challenge is probably the biggest one. I will mention that one probably only is the geopolitical risk. I think that is what makes really nervous the most of the investors. And then in terms of what can be done to improve or make the investors more positive in terms of investing in those countries is firstly, to address the biggest risks, to have the geopolitical stability, and then remove that long existing the trade barriers that we have. The second probably predictability of the policy, the legislation, the tax and customs, because what we are seeing, at least in Armenia quite often these days, that we can have the change in the legislation with the very, maybe for good reasons, so it's not about, but then those changes being made with quite short notices and with little consultation as a result. That is not predictable for the investor. Investors look for the predictability of the policy making. The infrastructural investment, something which we talk about already here, and probably the more effort, I think it was also in the IMF report on digitizing the agenda, the infrastructure, the public services, accessibility in a digital way. And probably the last one, which again was, I think, in the IMF report, it's about green investment. Countries in this region have sort of varied maturity of the legislation on the supporting the green investments. So we do need to work, I think, more on developing and having the legislation which would support the green investments, which will be also quite attractive for the investors, I think.
Thank you, Irina. We're going to come to you, Mr. Drakinos. The recent transition report from the EBRD focused on structural transformation, green transition, reconfiguration of supply chains, mineral resources that are affecting the global and regional economies. How can CCA countries benefit from these transformations and realize more robust economic growth in the future?
I will answer the question you mentioned about our transition report, and I want to take also the relay from Irina and start the response from green transition. Green transition is key for economic growth, but also, for long-term survival, because in climate change is a very important threat. And we see, a lot of countries taking measures, and they meet at these COPs from every year, and they take commitments, and we are encouraged by the fact that these commitments are increasing, and the countries seem to realize that something has to be done on green transition. And of course, in order for to pass from the wish level to the actual implementation, you need to put policies that encourage, and you need to streamline investment climate. You need to encourage foreign direct investment come in the countries and get the potential out in the market. I have seen in many countries some net zero plans. What I mean by net zero are, the prospect of how can a country achieve by a certain date, 2050 is according to the Paris Agreement, more or less, net zero emissions in its economy. And I've seen the graphs and the assumptions in the energy sector, and these are the percentages of renewables, the percentage of wind and solar, especially wind, are so high, and we are so much lagging behind in these targets, and we need to do so much more. So this is a structural change that will bring growth and will bring prosperity and will make this growth resilient and sustainable. One of the factors. When I was based a few years ago, I was based in Tashkent, and that's anecdotal, but it's kind of serious because it came from the World Bank. So World Bank colleagues said that the renewables generation potential of Central Asia alone, only Central Asia, right, is at that time we're talking about 2019, 3 times the total energy needs, of India and China together. So imagine how much we're talking about. There's there to tap. And then, of course, we're talking about Caucasus, where we are here. there is so much to do. Each country is different, right? Georgia has a lot of hydro, Armenia has nuclear, and Azerbaijan has is oil, gas related, generation economy. But there is so much to do. Each country is starting from a different level. We have more than 300 days of sunshine here in Armenia. We should capture this for the economy. We need to encourage investment. So it's important that we do that. So that will bring growth, that will improve, that will also will mean that the country has to, the Minister of Finance probably has to carve out some amount for investment in the grid, because that's going to be always public sector owned, and to improve the grid. So it needs to prepare. So in preparing the economy, preparing with legislation, and also increasing foreign direct investment and generating local investment in these sectors is key. It is going to bring growth, and it's going to make the economic growth potential more sustainable, and the people happier. Now, one chapter is this. Something else we mentioned in our transitional report is the reconfiguration of supply chains that you mentioned. So the economies in the region that we are talking about today are in a way fragmented in various key sectors, and as such, they cannot always attract global players investing in, let's say, some of the products, some of the opportunities. But what the report is alluding to, and what we could work on, is through cooperation and regulatory changes, make possible for clusters to develop. So cluster between companies in a certain part of the region or in the whole region would allow economic acceleration, more investment, more possibilities to address export markets more dynamically, and also capture some potential there. And for mineral resources, there are countries that have more mineral resources than others, but still they don't take full advantage. So regulatory change in order to attract foreign direct investment or develop local know-how and try to take advantage of this potential and just address it in the export markets is also a key for structural change, sustainable growth, and I think that's the answer. Thank you.
Thank you very much, Mr. Trakinos. We are going to open up for the last 10-15 minutes to floor questions. Anyone has a question they want to ask our panelists? It looks like we have a very shy audience.
Can I ask a question?
Sure.
Thanos, you were Thano. Yes, in Greek it's Thano. You had a slide about risks, and I remember that growth is a risk. So can you explain why growth, and until after which threshold of growth is a risk, and what kind of risk is it? Why do you call it this way? I mean, I can understand the other column of risks, but growth, can you just qualify a little bit? Thank you.
Yeah, of course, I'm happy to do that. The way that we frame it is that we have a baseline forecast, and the baseline forecast, it depends on recent developments, but also on assumptions about growth for countries that are trading partners of the CCA region, and therefore the CCA growth depends very much on growth in China, growth in the US, growth in the European area countries. Now, to the extent that the assumption about growth in the other parts of the world turns out to be lower than expected, then that would be a risk for the growth in the CCA region.
Martin, you still.
Another question.
Sure.
Yeah, but this is now to Martin. You know, about green transition. We hear that the financial sector can play a key role in encouraging and making green transition possible by, you know, even pricing the loans of commercial banks. That's also to you, Irina, in such a way to encourage or not. What is? I mean, out of curiosity, also as a development institution, trying to map the market and see what can we do. What could be your view? How do you see the central bank or the banking sector role in assisting this green transition?
Thank you. I think there is a huge debate, and there was a huge debate at the IMF this spring about green transition and greening the economy. One thing that I think is very important to mention is that central banks shouldn't be overstretching themselves with everything in the world, so they are not the only game in town. But definitely there are some things that central banks must do. First is, if you look at the risk structure of current loans or the future loans, I think our regulations should be addressing that question of coming risks, taking into account the profile of the business taking credit, but also for Armenia's case, we are in very dire circumstances because climate change in Armenia is here and now. It's not something that we expect to come or arrive in 10 years or so, but annual temperature increase in Armenia is higher than the global average, and there is less precipitation year after year. So what can central bank do with banking sector together is like trying to come up with regulations which are smart enough to calculate for the future risks in terms of greening. And that would be probably our 5 cents into the game.
If I may, no other questions, if I may close with our last final question. This will be for Tanos. Lower and stable debt levels and a positive outlook bode well for the local regional economies. But the IMF always recommends enhancing fiscal frameworks to ensure long-term fiscal sustainability. What features should be improved in the current fiscal institutional setups in our regional countries?
As I think trying to say in my presentation, the medium-term fiscal frameworks need to be thought more in a forward-looking and strategic way, and the fiscal institutions need to support the medium-term fiscal frameworks. In some countries, the medium-term fiscal frameworks are ingrained as part of the budgetary process. In some countries, you have rolling medium-term budgeting. And therefore, this goes back into also what Irina said, that the private sector would benefit from more predictability in terms of government policies. And thinking of fiscal policy in a medium-term perspective provides this predictability both for the revenue side and the taxation levels, but also on the spending side and the priorities for the government. And therefore, I think instead of thinking of the budget as an annual exercise, that it is delinked from the previous year and the next year, I think we need to start thinking of budget cycles in much more medium-term perspective and institutionalize that in our budgetary processes.
Thank you for that wonderful answer. This is a yes, Martin?
Before you conclude, I think there is one part in the report where we talk about structural reforms. And when we talk about structural reforms, usually we're talking about red tape, bureaucracy, trying to be able to create an environment where we can bring new investments in. But that is the dilemma that I've been thinking for a while, and I want to share what my understanding of things is I think the most important and credible source for us being able to implement structural reforms is the public administration reform. If we don't have capable people within the government structures who can solve difficult problems of the 21st century, partner with the private sector on solving those issues, then everything else is illusional. So we can think about many, many things, but if there are no people in place who understand the complexities of 21st century, who are equipped and capable, then there is a problem there. So from my perspective, the major structural reform that should be done, not only in our region, but everywhere probably, but also in our region, is public administration reform. It's easier said than done, but without that precondition, I think we can gather in 5 years here, talk about the same things like red tape, giving subsidies to this, giving subsidies to that, and we'll come to the same conclusion. This is question number one. Regarding second thought that I want to share is that if we think about our own region, which is Caucasus and Central Asia, we have that positive spillover from a very unfortunate events on Russia-Ukraine. So there was a big positive external shock coming to the country. And I think the challenge for every government in the region is the ability to convert that demand, positive demand factor into potential GDP growth, into productivity. Not many of us are able to do that still, but I think that's one thing that every single government in the region should be focusing on. And the central bank's role in that equation would be providing macroeconomic stability so governments can concentrate on that thing.
Thank you, Mr. Gostian. Actually, the issue of what you're really discussing is actually state competence on some levels. And part of that in countries like Armenia is driven by the fact that private sector salaries are so much higher than public sector salaries. So it's very hard to attract people. So it's almost the chicken and the egg. But I think you're absolutely correct. So one of the biggest governance issues, and I know it from Armenia, is essentially the lack of middle management in the private sector and a lack of competence on the public sector. So I'm glad you raised that point, because without solving that, as you said, 5 years from now, we'll be here discussing the same things. I want to thank all of our panelists who have been excellent in their presentations. And this concludes our forum for today. Thank you for joining us.